Hello, this is take 7 of what seems to be forever na. What the internet is so slow right now, and I cannot really continue recording the lesson because Zoom needs to have an internet connection for me to be able to talk. And yeah, so I've decided that I'm not gonna dig into the solving part of this lesson since everything that's coming out in the final exam will be theories only for this particular topic. Again, I will reiterate that the problem portion of the exam will be about capital investment analysis only. So yeah, let's start the financial statement analysis lesson. So the primary objective of accounting is to provide information useful for decision making. So to provide information that supports this objective, accountants must consider the intended users, the types of decision users make with financial statement information, and available means of analyzing the information. So yeah, we already know that accounting is the language of business, and its main objective is to provide accounting information for various users of the financial statements. And so the accountants that are responsible for preparing the financial statements are also responsible for interpreting the information in that particular statement. And how do accountants interpret such data? So that is when the financial statement analysis come into action. So the users may have different uses of the information, and there are different kinds of users of the financial statement. We have the creditors, the shareholders, the lenders, even the customers and the employees. So there's so many there's different types of decisions that they're going to make. So there are different interpretation of the financial statement information that is going to be made by the accountants. So there are three methods of analysis in the financial statement analysis. We have the horizontal, vertical, and ratio analysis. So financial statement analysis would focus primarily on isolating information useful for making a particular decision. First, we have an exhibit here, 13.1 and 13.2. This financial statements of Melvick Company involving the income statement and the statements of retained earnings. We also have here the balance sheet as of December 31 from 2011 and 2012. Let's go. Let's discuss first the first technique and financial statement analysis. We have the horizontal analysis. It is also called as a trend analysis. It refers to studying the behavior of individual financial statement items over several accounting periods. So these periods may be several quarters within the same fiscal year. Wait. So the analysis of a given item may focus on trends in the absolute dollar amount of the item or trends in percentages. So the horizontal analysis involves analyzing the financial statements over several accounting periods. So punta tayo kita sa taas. In a horizontal analysis, the interpretation of the data will involve different time periods. So for example, itong Camellic Company, meron tayong 2011 and 2012 data information. So horizontal analysis, it will interpret the data through several periods. So let's say sa sales, in 2011, 800 lang. In 2012, 900,000. So there's an increase in sales. So horizontal analysis will give you that information as to what happened or what changes have been made or ano ba yung mga nangyari for several periods. So ito yung um objective ng horizontal analysis. So there can be absolute amounts and also as percentage analysis. So here, Exhibit 13.3, we have the comparative income statement of Melvick Company, and this kind of interpretation is a horizontal analysis. So, tingnan niyo 2011, 2012, pinakita niyo yung difference niya through percentage. It's a percentage analysis. So, from 2011 to 2012, there's a 12.5% change, positive change from sales. Cost of goods sold, there's a positive change also, 27.1, di ba? Mas itaas ang sales, mas itaas pa ng cost of goods sold, so on and so forth. So the main purpose talaga ng horizontal analysis is to give information or to interpret data from several years. So next we move forward on to the vertical analysis. So vertical analysis uses percentages to compare individual components of financial statements to a key statement figure. Horizontal analysis compares items over many time periods. Vertical analysis, on the other hand, compares many items within the same period. So while the horizontal analysis, yung kanina, ang pag-interpret sa data is through different years. Interpret from 2012, 11, 13, yung mga ganon. Ganon yung kanang pag-interpret ng data. Kung there's been changes ba, anong nangyari. So sa horizontal analysis, ganun yung pag-analyze. Sa vertical analysis naman, different. Ang gina-analyze niya here is one component or individual components of a financial statement. Gina-compare niya to a key statement figure in a financial statement. In a financial statement din. So let's say for example here, Exhibit 13.4. Notice that Melvic Company, ito yung comparative income statement niya. You can actually 2011, 2012. Tingnan nyo. Sa sales, 900,000. Paano niya in-interpret yun? Ang sales, ginawa niyang key statement figure here sa financial statement. So, ito yung key statement figure niya, 100%. And sa vertical analysis, compare niya kung how much is the percentage of cost of goods sold to the percentage of sales. So, 610 is 67.8% of the sales. Okay, I keep on pausing the video because there's been chaos here inside our house. Medyo maingay here. So yeah, if you can hear background noise, then please bear with me. And yeah, the key statement figure again is the sales vertical analysis. You compare each statement to a key statement figure, each element or each individual component to a key statement figure. So like sales, 900,000, that is 100%, that is the key statement figure. And you will just have to compare it to interpret the data. So madali lang yung vertical analysis. Let's say, ito yung sa balance sheet. Asa na tong balance sheet niya? So, vertical analysis of a balance sheet involves converting each balance sheet component to a percentage of total sales. The vertical analysis of Melvich balance sheets in Exhibit 13.5 discloses few large percentage changes from the preceding year. So, ito yun. 13.5, ito yung vertical analysis sa comparative balance sheet. So, in 2012, ang cash is 3.9% of the total assets. That is, total asset yung key statement figure niya, 100%. Marketable securities, 3.9, so on and so forth. So there, you will just have to make a key statement component. Usually, if it's asset, of course, the total asset, each item element, you will have to compare it to the key statement figure. Liabilities naman is the total shareholders and total liabilities and shareholders equity. And you can actually, so here, gonna give niyang comparative balance sheet. So you can actually also compare what happened to two different accounting periods na ginagawa din sa horizontal analysis. Pero sa horizontal analysis kasi, ang interpretation ng data is bakit may changes, or I mean, bakit 2012, ipang 2011 to 2012, gina-compare jud siya. Pero sa vertical analysis, you can also the internet is really testing me right now. Where are we? Yeah, so I'm so sorry if this video is going to be long because the internet really is so bad right now. really bad. Yung mga putol siya, tapos it won't continue. And sometimes, pag after maputol, it will continue. So I decided to wait and just continue the lesson. So yeah, where are we? So the difference between the horizontal analysis and the vertical analysis is that, again, in horizontal analysis, the interpretation of data is based on different time periods. Meaning to say, ginay-compare talaga kung anong mga nangyari from one period to another period. Here naman, in vertical analysis, ang interpretation of data is that each individual component in a financial statement is being compared to a key statement figure. If we talk about the income statement, our key statement figure will be the sales. And the or net income. In the balance sheet, sa total asset is our key statement figure. So compare natin itong mga individual items of asset to the total key statement figure, which is the total asset. Individual liabilities, which is ang key statement figure niyan is total liabilities and shareholders equity, so on and so forth. Now let's proceed to the ratio analysis. So what is a ratio analysis? It involves studying various relationships between different items reported in a set of financial statement. So ang ginastudihan sa ratio analysis is relationship between different items reported in the set of financial statement. Ano ba yung relationship ni asset and ni liability? Ano ba yung relationship ni asset kang shareholders equity? So yun yung mga ginastudihan sa ratio analysis. So objectives of ratio analysis. So as suggested earlier, various users approach financial statement analysis with many different objectives. So creditors are interested in whether a company will be able to repay its debt on time. Both creditors and shareholders are concerned with how the company is being financed, whether through utang, equity, or earnings. And stockholders and potential investors analyze past earnings performance and dividend policy for clues to the future value of their investments. So, in addition to using internally generated data to analyze operations, company managers find much information prepared for external purposes useful for examining past operations and planning future policies. So, although many of these objectives are interrelated, it is convenient to group ratios into categories such as measures of debt paying ability and measures of profitability. Profitability. So, yeah, itong ratio analysis, ito yung medyo mostly ginagamit talaga in interpreting the financial statement data, because most of the interpretation and the ratio analysis are those that are actually useful for different users of the financial statement. So I'm really sorry if you can hear the barking of the dogs of my neighbors right now. There's so many dogs in my neighborhood. I don't know, they're kind of aggressive right now. So yeah, let's first discuss the measures of debt paying ability. We have the liquidity ratios. Liquidity ratios indicates a company's ability to pay short-term debts. From the word liquid, short-term. So ang liquidity ratio, ang iyang gina-interpret is the ability of a company to pay its short-term debt. So they focus on the current assets and current liabilities. So we have first the current ratio. So current ratio is equal to current assets over current liabilities. So ang interpretation niya, anong gusto i-interpret ng current ratio? The current ratio is expressed as the number of dollars of current assets for each dollar of current liability. So is how many assets are there? So ang interpretation yan, current ratio is how many current assets are there that can pay the liabilities or current liabilities na meron din ang company. So it is expressed as the number of dollars of current assets for each dollar of current liabilities. So tingnan nyo dito. So sa example here, Melavic and Laro. Melavic lang tayo focus. So, current asset niya is 168. The liabilities is 46,000. So, ang working capital niya is 122,000. Ang working capital actually, by the way, is current asset minus current liabilities. So, the current ratio is 3.65 is to 1. So, there are $3.65 to $1 na liability. So, medyo paspas, medyo dako ang kanang ability niya to pay is short-term debt kasi mas dako ang kanyang current assets to current liability. Next, we have the quick ratio. So, quick ratio, also known as the acid test ratio, is a conservative variation of the current ratio. So, para na lang siyang current ratio, but it is more conservative. The quick ratio measures a company's immediate debt paying ability. So only cash, receivables, and current marketable securities are included in the numerator. Kanina doon sa doon sa current ratio and current asset, it includes all the current assets, inventories, prepaid expenses. But here, sa acid test ratio or the quick ratio, the quick assets lang. Ano yung mga quick assets? Ito yung mga asset na mas madaling ma-convert into cash. So we have cash, the accounts receivable, and the marketable securities that can be sold right away. So current ratio, if we solve that, kanina, same given, same interpretations. We also have the accounts receivable ratio. And how do we solve accounts receivable ratio? Ito yung we solve for the turnover of the accounts receivable. That is net credit sales or mga pautang na to divided by the average accounts receivable, that is accounts receivable turnover. And ang kanang accounts receivable turnover, magamit nato na siya to solve for the average days to collect the receivable. So 365, that is 1 year, divided by the accounts receivable turnover, that is your average days to collect a receivable. Again, we will not dig into the topic further because it will involve a lot of solving pa if we dig into that, into the lesson deeper. So we just have to know the concept of um, ratio analysis, horizontal analysis, vertical analysis, because rin lang din yung lalabas sa exam. So we also have inventory ratios. Inventory turnover indicates the number of times on average that inventory is totally replaced during the year. So inventory turnover, the cost of goods sold, the cost ng mga nabaligya divided by the average inventory, that is the time the time na you have to replace your inventory. Ito yung inventory turnover niya. And now if we solve for the average days to sell the inventory, we have 365 days divided by the inventory turnover, that is the average time or average day that we can sell such inventory. Tapos na tayo sa liquidity ratio again. Liquidity ratio, the data interpretation there is on the company's ability to pay short-term na mga utang. Now let's proceed to the solvency ratio. Solvency, of course, solvent ka long-term. Liquidity, liquid, short-term. So liquid solvency ratios are used to analyze a company's long-term debt paying ability in its financing structure. Creditors are concerned with a company's ability to satisfy outstanding obligations. So the larger a company's liability percentage, the greater the risk that the company could fall behind or default on debt payments. So usually ito yung medyo ginagamit talaga, madugong ginagamit talaga ng mga businessman because most of the businessmen are investors that involves a large sum of money through their investment. So for ginatanaw dyan nila ang solvency ratio sa isa ka company or business. So we have the debt ratio. The following ratios represent two different ways to express the same relationship. So and both are frequently used. Most of the time, ito yung kinatanaw talaga ng mga investors. So debt to asset ratios. This ratio measures the percentage of a company's assets that are financed by utang. So gina-measure niya ano yung ang percentage daw sa assets sa company na gipalit or ginafinansan through utang. So that is debt to asset. Here naman yung debt to equity, same lang din, gina-measure lang niya ang percentage of a company's asset, tapos ang gina-finance is equity. So ito yung formula niya. Debt to asset, total liabilities, total assets, debt to equity, total liabilities, total stockholders equity. But so yeah, applying these formulas, example, debt to ito yung Nanawa Kamalabi Company in 2012, 146 ang utang, ang liability is 362. So total equity is 508. So divided by total liabilities over total asset, that is 146 divided by 508. There's 29%. 29% of the liabilities of the asset are financed by the total liabilities. So each year less than, so on and so forth. Again, to reiterate, solvency ratios involves the interpretation of the company's long-term debt paying ability and its financing structure. So ang gina-measure niya dito is, can the company be able to pay long-term debts, and what is the company's composition? So financing structure niya, ano ba yung, how much is being financed by utang or by sharehold, by equity or by earnings. So because of the number of times interest is earned, these ratio measures the burden a company's interest payments represent. So users often consider times interest is earned along with the debt ratios when evaluating financial risk. So medyo madugo na ito na topic if we dig deeper. So plant assets to long-term abilities. So companies often pledge plant assets as collateral for long-term liabilities. So ato na yung ano niya, ginasolve niya here ang kanang structure niya, net plant asset over long-term liability. So kibali mo lang siya gihimong kung sa company usually ginahimong collateral sa mga company ang ilang mga plant assets to secure long-term mga utang. Usually pod again na sa kanang personal life kanang individual lang nga gina-collateral ang ilahang mga property to acquire such utang. So, tapos na tayo sa katong measures of ano yun? Debt paying ability, which is one of the objectives of the ratio analysis. We will now proceed to the measures of profitability. Paano ba natin measure yung profitability ng isang company? Most Again, nakat na naman yung video because of the incompetence of PLDD, I guess. So, yeah, let's go back. Tapos na tayo sa measures of the debt paying ability of the company. Now let's proceed to the measures of profitability of a company. So profitability refers to a company's ability to generate earnings. Both management and external users employ the profitability ratios to assess a company's success in generating profits and how these profits are used to reward investors. Some of many ratios about to measure different aspects further are discussed in this lesson or in this section. So we have the net margin or the return on sales. Gross margin and gross profit are alternate terms for the amount remaining after subtracting the expense of cost of goods sold from sales. Net margin, sometimes called the operating margin, profit margin, and the return on sales ratio, describes the percent remaining of each sales dollar after subtracting other expenses as well as cost of goods sold. Net margin can be calculated in several ways. Some of the more common methods only subtract normal operating expenses or all expenses other than income tax expense. So for simplicity, our calculation uses net income. So net margin is net income over the net sales. Lang yung pag-sold ng net margin. Net income. Na-stop na naman yung video because again of the internet, which really is very annoying right now. So we also have the asset turnover ratio, sometimes called the turnover of assets ratios. It measures how many sale dollars were generated for each dollar of the asset invest. Pila daw ka dollar ang na-generate sa every asset na gi-invest. So asset turnover equals net sales over the average total assets. And we also have the return on investment, also called the return on assets or earning power. It's the ratio of wealth generated to the amount invested to generate the wealth. So net income over the average total assets, that is your return on your investment. Return on equity naman is to measure the profitability of the shareholders' investment. Ito yung ginagamit talaga ng mga shareholder. It is usually higher than return on investment because of the financial leverage. Financial leverage refers to the using of that financing to increase the assets available to a business beyond the amount of assets financed by owners. So return on equity equals net income over the average shareholders